Welcome. In this analysis, we are going to deconstruct GigaDevice. We'll break down its core business, unpack the powerful forces driving its growth, and really pinpoint its strategic position in the global semiconductor market. So, we're going to begin with our central finding because it really provides the framework for this entire analysis. What we found is that GigaDevice is a company with very strong fundamentals and clear growth catalysts. The key, however, is that its current valuation suggests the market has already priced in a significant amount of this future success. And here's the roadmap for our analysis today. We're going to start with the core business, then analyze its growth engine, review its future strategy, put its valuation into context, and we'll finish up with a clear-eyed risk assessment.
So, to begin, we really need to understand exactly what GigaDevice does. Let's decode its business model and get to grips with its core products. GigaDevice operates on what's called a Fabless model, and you have to understand this is a critical strategic choice. By focusing exclusively on chip design and sales, it avoids the absolutely massive capital expenditure and operational complexity of manufacturing. This allows the company to pour its resources into R&D, which helps it stay agile and focused on innovation. The company's product portfolio is really built on three main pillars, and a great way to understand them is through an analogy to the human body. First, you have memory, think NOR Flash for storing code, and DRAM for active data. This acts as the brain. Then you have the MCU, or microcontroller, which is the nervous system that processes all the commands. And finally, you have sensors, which provide the senses, allowing devices to interact with the physical world.
And this diversification, well, it translates into significant market leadership. As you can see, GigaDevice holds top positions both globally and domestically across several key product lines. This is a really important differentiator, as it provides a degree of insulation from the cyclical volatility that can really hit more specialized semiconductor companies.
So that foundation really sets the stage for the company's current growth story, and it's a narrative that's being driven by two very powerful forces: a cyclical industry recovery and a very distinct structural opportunity. This timeline shows a very clear V-shaped recovery. After a major industry downturn in 2023, the company saw a powerful rebound in 2024. And looking ahead, growth is projected to accelerate into 2025, really fueled by new demand coming from the AI and automotive sectors. The scale of this recovery is, well, it's significant. Just look at this chart. Net profits surged by over 584% in just 1 year. This really demonstrates the high operational leverage that's inherent in that Fabless model we talked about, where a recovery in demand and pricing flows directly to the bottom line. And crucially, management's own commentary confirms this isn't just a simple cyclical bounce. They've explicitly identified structural growth drivers in AI and automotive. This suggests this recovery cycle might just have a higher peak and a longer duration than previous ones. But beyond the general market recovery, there's one specific dynamic that stands out as the most powerful near-term catalyst for the company. What we're witnessing here is a classic strategic opening in the market. The major global producers, the giants, are reallocating their manufacturing capacity to high-end memory for AI applications. This pivot is creating a supply vacuum in the legacy DRAM market, and that's a huge opportunity for GigaDevice to capture market share and potentially benefit from much better pricing. And the potential scale of this opportunity is really significant. Management itself is guiding for revenue growth of over 50% in this one specific product line for 2025. That metric alone highlights just how central this legacy DRAM shift is to the company's entire near-term growth outlook. Okay, so that covers the immediate growth drivers, but it's also absolutely essential to examine the company's long-term strategic evolution. Where are they headed? Well, the company's long-term strategy involves a very deliberate pivot up the value chain. They are actively moving from being a supplier of individual components to becoming a provider of integrated solutions. The whole goal of this ecosystem strategy is to create stickier customer relationships and decrease their exposure to the price volatility of commodity-like products. Now let's turn to valuation. And to be perfectly clear, the objective here is not to forecast a price, but to simply understand how the market is currently assessing the company's prospects relative to its peers. This table provides some really critical valuation context. Based on 2026 earnings estimates, GigaDevice is trading at a forward price-to-earnings, or PE, multiple of roughly 48 times. Now, this represents a substantial premium to its global MCU peers like NXP and STMicro. It also stands out against memory competitors, although their negative earnings make a direct comparison a bit difficult. This premium valuation is the market's way of signaling that it has very high expectations for future growth. And this naturally leads us to the core analytical question. What specific expectations for market share gains, for margin expansion, and for earnings growth are already baked into this current market valuation?
Of course, a complete analysis requires a clear-eyed look at the potential risks and the challenges that could get in the way of this optimistic outlook. The key risks here really fall into several categories. From a market perspective, you've got the inherent cyclicality of the industry and just intense competition. Internally, there is execution risk, which is tied to scaling new products. And then externally, geopolitical factors remain a persistent variable for the entire global supply chain. So, to summarize our key findings, GigaDevice is a resilient, diversified business that is currently benefiting from a very strong structural catalyst in the DRAM market. It is also executing a clear long-term strategy to move up the value chain. The central issue for any analyst, however, is that these positive factors appear to be well reflected in a valuation that leaves very little room for error.
And this brings us to the key forward-looking question. The company's long-term success really seems to hinge on its ecosystem strategy. The ultimate test will be whether this pivot provides a sufficient competitive moat to navigate the inevitable pressures of the next semiconductor downturn.